Hey, good morning everyone, and welcome to the PivotBoss Pre-Market Report for February 23rd, 2016. I am Frank Ochoa, aka PivotBoss, with analysis for the current session. Here's a look at the ES and the daily time frame right now. You can see we've been trading within the boundaries of this trading range from 1939.5 to 1804 basically. And that trading range, we've been in that zone since the second week of January, and now we're coming into the last week of February here. And we're still in that trading range, building energy. We're currently at the upper end of the zone right here. So we basically reached from our our reversal zone all the way into the first two targets. 1950.5 was like the last target that you could play to, but right in the zone is where we're going to see how price responds to this area. Because if the market can't find acceptance beyond 39.5 or 50.5, we could be looking at another rotation back down within the boundaries of this range. Any push beyond this zone and acceptance would suggest a continuation into 2007 with a shot to see 2075, the top of the key range. Obviously, anytime you find rejection down in these levels, the expectation is for the market to eventually return it back to value here, and that's much, much higher. However, we've been seeing lower and lower resistance levels, and that shows you that the market bears are defending for attempts at seeing another round of lows here. So we'll see how this thing plays out. Obviously, we're watching 1921. We're still in a quiet uptrending market here short term, and we're feeling the edges to see how we respond. Okay, let's take a look at the intraday time frame. Looking at the intraday time frame of the ES right now, again, we saw the overnight rally the previous session, a big time move, and then we saw price just go flat at highs. Brought in a lot of participation at that zone. You can see on the 5-day profile, and right now in overnight trading we've pushed downward toward 5-day VPOC, didn't quite get there and bounced a little here. So this is important to see how this thing plays out. Obviously you can see that after an aggressive uptrending move here, we found a zone above 1939 where the market is having trouble getting beyond, and that's what we were talking about before. Once you get into 39.5 and beyond, it's going to start being very difficult to see how price responds above that zone, because that's an area that's been rejected over the last month and a half. So failure to get above this 1939.5 here would suggest a quick push into 1922.75 5-day VPOC with a shot at rotating back toward the bottom of 5-day value at 1901. Any pullback into this 1900 zone could be a significant area for bulls to defend for a rotation higher. Failure to hold that level opens up a move back into 1865. All right, let's take a look at crude oil. Here's crude oil in a daily time frame. We've been trending lower, obviously. Very clear downtrending structure. Price is pulled back into the trigger zone of the pivot-based DMAs, but you haven't really seen a rotation lower. Instead, what you've seen is kind of a range form here. And this range could offer a solid breakout opportunity, especially over the last 3 to 4 days. Above the previous week's high here of 34.21s opens up a return to the midpoint of the key range at 35.75 with a shot at seeing further strength beyond that level. A failure to hold 31.32 and especially the previous week's low at 31.02 opens up a push likely to new lows. So right now this near-term range from 34.21 to 31.02 offers an opportunity for traders to build a position in the zone and look for expansion outside of it. Since we've been trending lower, the expectation is a downside push, but we've been trending down so long now, and the recent rejection of prices below the key range low here, remember that initiated us to believe that a push back to 35.75 was likely. So right now the expectation would be for a continuation at 35.75, and then we'll see what happens there. But the fact that we saw this rejection here implied a move at least back to the midpoint of the range. We've yet to see that move, so that could be forthcoming, especially if prices can hold above 31.02. All right, taking a look at the intraday time frame for crude oil, you'll notice price has been trading within a very clear range on highs here. I mentioned this range yesterday in the closing report, and how failure to hold above the bottom of the range could open up a move back into the meat of this profile here, where that HVN is, that previous 5-day VPOC, and we saw a move halfway there, and now we're back to VPOC to test it from below. 5-day VPOC is 33.45, and right now, because it was offered early on and dropped, we come back, we're seeing it go offered again, short term. So right now, this is an early opportunity here where bears are defending value for a shot at seeing a push back into previous 5-day VPOC, which is going to be much lower at about 31.70. So right here, 31.75 is the level. Above 33.55 squeezes into 34.10 to 34.21 for another test. All right, taking a look now at gold futures. Gold has been pushing higher, obviously, very nicely, but since the blow off top right here, 300+% of average daily range, we knew that that was probably the short-term top, and we were looking for a pullback. Once we got the pullback and we saw the nice edge that was defined there, we thought we could see a push back up within the range and create a distribution range or perhaps a reaccumulation range. The way it's building out right now, it appears this could be a distribution type of range here, lower highs and the sort. So that could lead to a push back toward previous composite VPOC, which is now at HVN at 1126.10. So failure to hold composite VPOC at 1196.5 would open up the doors to a move back toward that zone. So it's going to be important here. Bulls are trying to defend here for a continuation. Bears want to take it offered for a return back to previous value. All right, let's take a look at the NQ here. Here's the NQ in a downtrending market here. For the most part, we've seen a significant rejection. The rejection occurred off of the previous key range low from August, 38.93.5, and that slingshotted price right back to 42.26, which was our primary target. And now that we're back at that level, it's very important because if the market can find acceptance beyond 42.26, the expectation would be a move into 44.21 and then a continuation into 45.58. So this is important here. Any failure to hold beyond 42.26 opens up another push back toward lows. And right now you've seen kind of a pattern here where we've come into this line and pushed to new lows. We've come into this line, pushed to new lows. We're coming into that line. We could definitely see another rotation down if price can't see acceptance above 42.26. So this is an important zone right now. The market clearly forming a range on these highs. A breakout to the upside would suggest a test of the key range high, 43.09. And that's going to be an important battle zone that bears want to defend for a rotation lower. Otherwise, above it opens up a pushback toward 45.58. So a lot to think about with regards to the NQ here around 42.26. If we look in the intraday time frame, you can see how prices went offered off that zone. I mentioned to the trading room yesterday how this area has been defended. All pushes above it have been offered. You can see here just a big time zone with rejection above 42.27s. That led to the push backward. So right here you have an intraday LVN. Price come just shy of that zone, about 41.80. That's an area that bulls are trying to defend for a push through 42.27.5 and beyond. Otherwise, right now, any rejection or lower high in this area could be a quick move back in the 5-day VPOC at 41.61, followed by a move to the bottom of value at 41.44.5. All right, that's it for now. We'll see how this thing plays out heading into the rest of the session. Good luck and trade well.